Hello everyone and welcome to my morning report chart appraisals on Wednesday the 21st of December. This is my final series of chart appraisals of the year, so we're looking at markets basically just consolidating really today, not really having any real direction on any real asset classes. You've got equities that are basically flat, you've got the forex markets that are sort of relatively consolidating. Let me show you the consolidation that we've got through. The dollar just basically sideways, and that's coming as treasury yields are consolidating, nothing really there, and on the 2-year and the 10-year. So the dollar is basically flat, equity markets are very flat, the volatility is very low at the moment, nothing really doing there. And in terms of commodities as well, gold is basically trading around flat, gold and silver sort of buzzing around the flat line, and the one market probably with a little bit of impetus is gold. And gold has jumped higher. We've had the contract change over, but still gold is higher by almost 0.75% today, so it is pushing back out towards that 54.50 sort of resistance on at WTI, so it'll be interesting to see if that gets tested. But other than that, the markets are basically neutral now. Sorry, that's the wrong chart. I should have that chart, and I'm also should not even be showing you that yet either. Anyway, so in terms of what we've got to look forward to today, a little bit of data, nothing too significant. You've got the existing home sales for the States at 3 o'clock and the oil inventories, but in terms of this is the data releases for the day, nothing really major until the existing home sales at 3 o'clock. Expected to drop slightly to 5.52 million. And then we've got the weekly crude oil inventories. So this is the existing home sales, strong numbers. 5.52 would be a positive number. And then the sort of clutch of oil inventories. You've got weekly crude stocks, 2.5 million on the negative. Now that would be a 5th week consecutive of negative crude oil inventories drawdown, so that would be a positive and again supportive for the oil price. But also you could balance that out with looking at the distillates. Again, that would be negative. If that is negative, and that would be supportive, but gasoline stocks could be balancing if they come out very strong. So you've got to watch out for those three aspects there on the oil price, but generally speaking, markets are fairly settled, nothing really doing today. So my chart today is the euro yen, and what we have seen in recent weeks is this euro yen rally pretty strongly, actually. You can see the uptrend line here nicely pulling the market higher, but just in the last sort of week or so, the market has just been starting to consolidate, and sort of more of a slight bear divergence actually on the RSI and stochastics, which are falling away. And look at the MACD lines, which have negatively crossed, so this could start to put a little bit of pressure on the uptrend. At the moment you've got to still go with the trend, but those sort of divergences that you've got on the momentum indicators are a little bit of a warning sign. Yes, we the near-term move is under a little bit of pressure because we've had this big bear candle that we had on Monday, which continues to be probably the sort of big influence on the chart, despite the fact that we had a bit of a rebound yesterday. That is a pretty strong candle that ultimately is dragging the market lower. Now, this sort of downtrend that we've got in the last few days here is sort of still pulling the market lower slightly. You've got the momentum indicators, which RSI failed around 60, and again sort of falling below 50. MACD lines are ready to cross negative as well. So we could see that the market is pressured to the downside. Now the initial support is 22.25, which has been tested on several occasions actually in the last sort of day and a half, and held. It's right on the limit of that now, and if that sort of breaks to the downside, you'd see that would reopen the 21.65 support. 21.65 being this sort of key low that we had on Monday, and if you break below that, you're looking back at the 20.85 low, and that would then be sort of into the realms of breaking this uptrend, which comes in at 21.35 today. So that 21.65 level is key for the market, and this these momentum indicators are starting to suggest perhaps there is a little bit of potential for a corrective move. But for now, you're staying with the trend, but we're starting to look a little bit more cautious with our sort of bull moves. Yes, the rallies, the corrective moves continue to have been bought into, certainly late November, early December, and at the moment it'll be interesting to see if this latest one is bought into. So you'd be looking out for sort of breaking above yesterday's high as a suggestion that the market is beginning to gain a bit of traction again. That's 2280. 23 figure is a little minor high as well, so between that 23 figure is also a bit of a pivot level actually as well, catching a few lows before becoming the high. So that is sort of resistance. So you'd be looking out for a move above 23 figure. I think if you saw that, I think that could start to regain a bit of impetus. But for now, it's sort of still drifting lower and still sort of looking to put pressure on that 22.25, which is now, just got broken. So intraday, that's starting to break down now. Obviously, a decisive move would need to be seen to sort of confirm that move, but still, I think the bears are beginning to get a little bit more traction on this, so it'll be interesting to see how this one pans out. But I wish you good luck in your trading today, and I will speak to you later. Thank you.